Welcome back to the AI Business Digest. So, Meta is facing one of the most critical moments since the Facebook rebrand. After years of shifting strategy from the metaverse to AI, the company has now entered a phase where massive spending is outpacing tangible results. In the past week alone, Meta has lost over $200 billion in market value after its latest earnings call raised a single, uncomfortable question. What exactly is the company building with all this AI investment? In today's episode, we cover how Meta's $20 billion in quarterly capital expenses and multi-billion-dollar infrastructure push have collided with Wall Street's demand for results, and how the absence of a clear AI product strategy is shaking investor confidence across Silicon Valley. Let's get into it. So, Meta just lost more than $200 billion in market value in 2 days, and the reason comes down to one uncomfortable question that Mark Zuckerberg couldn't answer on the company's earnings call. What exactly is Meta building with all this money? The company reported nearly $20 billion in capital expenses this quarter and a $7 billion year-over-year jump in operating costs, nearly all of it directed toward AI talent, hardware, and infrastructure. Wall Street wanted to know when that spending would start paying off. Zuckerberg's answer was essentially to ask for more patience and promise that better products were coming soon. Investors were not impressed. The spending itself is staggering. Meta is constructing 2 enormous data centers, expanding its GPU clusters, and analysts estimate the company could be a part of as much as $600 billion in US AI infrastructure spending over the next 3 years. In Silicon Valley, that number barely turns heads anymore, but on Wall Street it triggered alarm bells. The difference between those two reactions shows exactly where Meta stands right now. Tech insiders believe in the long-term potential of AI, while financial analysts want to see a return on investment today, or at least a credible plan for one tomorrow. Meta offered neither. When analysts pressed Zuckerberg during the earnings call, he leaned heavily on the promise of future models coming out of the company's newly formed superintelligence lab. He talked about frontier AI capabilities that no one else would have and massive opportunities once those models were deployed. But he couldn't point to a single product today that justified the spending or demonstrated what Meta's role in the AI industry would actually be. That gap between spending and product is what spooked the market. Meta made $20 billion in profit this quarter, so the company is far from broke, but this was the first quarter where the AI spending became visible in the financials, and there was nothing concrete to show for it. Compare that to OpenAI. Sam Altman is spending just as much, if not more, on compute and infrastructure, but when someone asks him why, he points to ChatGPT, a product that's pulling in roughly $20 billion annually with one of the fastest user growth rates in tech history. You can debate whether that growth is sustainable or whether the unit economics make sense long term, but the product exists and people are paying for it. Meta doesn't have that cover. The company's flagship AI product is Meta AI, the assistant that's baked into Facebook, Instagram, and WhatsApp. Zuckerberg said that it has over 1 billion users, which sounds impressive until you remember that Facebook alone has 3 billion users. Meta AI is being used because it's there, not because people are seeking it out. Then there's Vibes, Meta's AI video generator that boosted daily active users but hasn't translated into revenue. And then the Vanguard smart glasses, launched earlier this month, which feels more like a continuation of Meta's Reality Labs experiments than a serious AI play. These are all interesting projects. They show Meta is experimenting and iterating, but they're not flagship products. They're not anchoring a business case for tens of billions in annual spending. When Zuckerberg was asked directly about infrastructure costs, he didn't defend these launches. Instead, he pivoted to talking about what's coming next. He mentioned novel models and new products that he's excited to share in the coming months. That's a reasonable answer if you're 4 months into a new strategy, which Meta is. The Superintelligence Lab is new, and major AI models take time to train and deploy. But this was an earnings call, not a product showcase. Investors wanted numbers and timelines, not optimism. What makes this situation tense is that Meta is spending like it's in a race, but it's unclear what finish line the company's aiming for. Is Meta trying to build a ChatGPT competitor using all the personal data it has on billions of users? That would make sense strategically, but raises obvious privacy and regulatory risks. Is the company doubling down on entertainment and content creation with tools like Vibes, leveraging its dominance in social media and advertising? Or is Zuckerberg hinting at an enterprise play when he mentions business AI and smarter recommendations across apps and ads? All of those are viable paths, but Meta hasn't committed to any of them publicly. Right now, it looks like the company is doing all three at once, which means it's doing none of them with full focus. The market's reaction reflects that confusion. Google and Nvidia both had strong quarters and are spending heavily on AI too, but investors didn't punish them. That's because those companies have clear AI revenue streams already in place. Google is embedding AI into search, workspace, and cloud. Nvidia is selling the hardware that powers everyone else's AI efforts. Meta is spending just as much, but it can't explain what it's building or when it will be ready. That uncertainty is expensive. A 12% stock drop in 2 days is a wake-up call. Behind the scenes, Meta employees say the company's AI infrastructure work is real and it's progressing fast. Its Llama models are competitive with top-tier systems, and its compute resources now rival OpenAI and Google DeepMind. But those assets don't mean much without products that connect users or generate revenue. Meta's challenge isn't engineering, it's direction. The company must decide whether it's building tools to enhance its social platforms, creating a consumer chatbot to rival OpenAI, or pursuing broader AI commercialization. Until that decision is made, its massive investment remains an open question. Meta now has to deliver something tangible soon or risk losing even more confidence. Zuckerberg has bought himself some time by pointing to upcoming launches, but that window is closing fast. The pressure is on, and the company's next move will determine whether this was a temporary dip or a deeper signal that investors no longer believe Meta's AI vision has a clear destination. That's all we got for you in today's episode. Meta's AI investment has reached a scale that forces clarity. Spending at this level only makes sense if it translates into leadership or profit. And right now, neither is visible. The company's next product announcements will matter way more than any statement about long-term ambition. Investors have shifted from curiosity to expectation, and that expectation now defines Meta's position in the AI economy. This has been the AI Business Digest. Make sure to follow the show on YouTube, Apple Podcasts, Spotify, or wherever you get your podcasts to stay informed. Thank you for listening. I'll catch you in the next one.